The Dow is still down half a percentage point. The S&P is only down 5 points right now. The Nasdaq is hanging on to it. 3-point gain, Dom Chu. What's in Market Navigator?
Well, I'm certainly not going to navigate around NFL ownership issues right now. But all right, Kelly, so we've been talking a lot about how big and how important tech will fare depending on the outcome of tomorrow's election. But what about the small cap stocks overall? Our next guest says that small caps have had a tough go for the past couple of administrations, but that they could be ready to run to the upside regardless of who wins the White House. So joining us now is Gustaf Little, a senior portfolio manager at Allspring Global Investments. And Gustaf, this is an interesting thesis because, I mean, there's a mean reversion aspect. If you've been underperforming for so long, it's got to turn at some point. But what makes you think that now is the time, regardless of what happens with the election results this week?
Yeah, that's absolutely right, Dom. It's been a challenging period for small cap stocks. Historically speaking, small cap stocks do a little bit better in a Republican administration. But as you said, it has been a mixed bag. When you look through the last two administrations, it's been all about large cap stocks, and small cap stocks have really underperformed. We're into the 14th year of this large cap cycle, and we think the market dynamics and the fundamentals set up really well for small cap stocks, regardless of who wins the election.
Now, if that is the case, what types of small caps would you be looking at, and how would investors take advantage of it? Do they just buy certain value or growth-oriented ETFs in small caps, or do they look for specific names that might be in play?
Well, a number of the scenarios that have been driving this valuation gap between large cap and small cap stocks has been the AI, data center, and also the flight to safety trend. So we've seen the valuation spread among large cap and small cap stocks reach historically wide levels. So we think there are a number of different ways to continue playing this data center and artificial intelligence theme down cap, but at much more attractive valuations. One of those names that we think is really interesting here is called MYR Group. MYR Group is an electrical construction services provider, and they're really going to benefit from this transmission and distribution center theme regarding the aging grid. There's an expected $700 billion in spending for our transmission grid that they're going to benefit from, but also they have a commercial and industrial segment that should benefit from the growth in data center and AI. So while you can play this name, smaller cap, it has a strong balance sheet, but it's trading for about 50% off the valuations of large cap stocks. So it's trading at about 20 times versus about 30 times for the large cap growth names that are also poised to benefit from the same theme.
And Gustaf, before we let you go, that's the AI theme. We've been talking a lot about it. Is it just all about AI, or are there other plays besides artificial intelligence and tech?
Yeah, it's not all AI and tech. We think there are a bunch of high quality names down cap that you can really focus on here. As you go down in cap, there are a lot of non-profitable businesses. But as you roll up your sleeves and look at other names, you can find high quality businesses that are trading for discounted valuations. One of those names is in a beat up consumer sector. It's called Car Gurus. They aren't dependent solely on this tech trade and data center AI trade, but they're taking market share. It's not a very capital intensive business, but it's also trading for low PE multiple with high growth prospects in the small cap space.
All right. Gustaf Little with the trades on MYR and Car Gurus. Thank you very much. We'll see you soon, sir.